name's Carl Buell with Navocate Business Sales and Acquisitions. Today's webcast is titled How to Successfully Work with Private Equity, and we have our friends from KLH Capital joining us to give this presentation. Now, this is a Navocate Webit. We define that as cool content fast. We try to get in and out within 30 minutes, and at the end of 30 minutes we can open it up for questions if there are any. Some general information and announcements. Attendees are in listen-only mode. In addition, if you have any questions throughout the event, you can type them into your Q&A box on the right side of your screen. We are recording this session, so your participation in today's event is your acknowledgement that we're doing so and agreement to participate in that. And this is also a live event, which means nothing ever goes wrong, and we'll try to make sure that that happens. We have participants from today, registered people from Sausalito, California, Pennsylvania, New York City, Marietta, Atlanta, and several people in our backyard here in the Tampa Bay area. Our presenters today are Will Dowden. Will is a principal with KLH. He serves on their board of directors, and he's been involved in 24 acquisitions with them. He's also on the board of directors for the Tampa Bay chapter of ACG, the Association for Corporate Growth, which is the private equity national and international association. Graduated from University of Virginia with a BS in Commerce and a minor in aerospace. We also have Kyle Madden. Kyle is a vice president with KLH. He serves as the head of origination for them and has been instrumental in 11 acquisitions while with them. Kyle's the chairman of the AMAA and sits on the education committee for M&A Source, and he is a graduate from the University of Tampa with a bachelor's degree in finance. So welcome, Will and Kyle. Before we get going, I wanted to just talk a little bit about Navocate. Navocate does business sales and acquisitions. We focus on what we call emerging companies or entrepreneurial companies above the Main Street brokers and below the boutique investment banks. We work with private companies to help them decide if they want to sell their company, if they want to buy a company or do acquisitions, or we help them with a growth strategy, which includes working with private equity, which we are going to talk about today. So with that, let me pass control over to Kyle. And Kyle, you have the floor.
Sure. Thank you, Carl. And it's a pleasure to have the afternoon with all of you. Basically, as you'll see on the screen, we'd like to really walk everyone through really four major areas. Number one, that being distinguishing KLH Capital and our firm within the forever competitive private equity and mergers and acquisitions landscape. Secondly, we'd like to walk everyone through and define the specific types of transactions that private equity groups often do look for and really their key value drivers. Thirdly, explain our internal and initial KLH diligence process and how you guys as intermediaries, business owners, consultants, CPAs, and attorneys can work with us, and a little bit about what our diligence process looks and feels like. And lastly, discuss how you can work with KLH as well as really any other private equity or investment firm. So this is a picture of Henry Kravis, and Henry Kravis is the founder of a very, very large private equity group up in New York City. Really the reason for including a picture of him, and I think this is especially noteworthy in the recent marketplace, but we are always presented with a connotation that private equity is really one thing, and that's used for buying out or acquiring 100% of a business from either a founding owner or an entrepreneur or a group of owners. And I think really one of our main goals today is to illustrate, that private equity can look and feel like a lot of different textures and colors and different styles. And I think that the main goal here is to, either find an equity group or a potential suitor that you, either as the entrepreneur or as the advisor or consultant, really feels comfortable with doing business with that person. So what I'd like to do here is really walk you through 4 different aspects or criterias of a private equity group. Number 1 being the personality of the group or of the folks within that firm. Over on the left-hand side, you see strict. Over on the right, you see flexible. Strict meaning there's a lot of groups that have one specific set or defined method of a buyout or of a partnership where your business or your client's business either fits into that hole or it does not. It's a yes or a no, it's a black or a white. Whereas over on the right-hand side where it states flexible, there are a lot of groups, KLH included, that has the flexibility within their capital and their fund base to really tailor the investment approach and the structure to a lot of different needs or demands or desires from the entrepreneur. Next up, you'll see operations. I think this is critically important to evaluate with both the entrepreneur as well as the advisor that, really whether or not the entrepreneur is looking to sell 100% and retire or sell a smaller stake of the company and remain on board, it's crucially important that you evaluate if the entrepreneur would like a partner who is very hands-on or is very hands-off. And really that comes down to the day-to-day operational level. A lot of groups that we run into, may have either an ex-IBM guy or an ex-GE guy or a retired Microsoft executive that really knows, maybe how to add value or how to run the entrepreneur or your business, where on the right-hand side you see hands-off, which is actually what we prefer, where we don't have what I'll call a stable of executives to run the business. So really, what I'm getting at is when, and I'll get into this in much further detail in a few minutes, but what we're ultimately looking for here at KLH at least is a manager or a management team or an owner or CEO or an entrepreneur who is looking to stay on board and is looking for a relatively hands-off partner, where we will not interact or interface on a day-to-day level, and we do not technically know how to run that individual's business. We mainly operate at the board of directors level, with different financings and strategic thinking. Next, you'll see investment horizon. Short term on the left, we define that as 1 or 2 years to 4 years being in partnership. On the right-hand side, you'll see long term defined as 5 years plus. Again, KLH would gravitate towards the right-hand side, and I think that's largely due to our fund base. Primarily, we are investing the dollars of private individuals, so we tend to have more of a long-term approach, which again we define as 5 years plus. And lastly, you'll see motivations. I think this again is very, very critical when you evaluate who you want to partner with or who you want to advise your client to partner with. When over on the left-hand side you're seeing current income, is it important for the equity group to take a distribution or to take cash out of the business every single year to meet their needs or their returns? Or over on the right-hand side, is the equity group more focused or motivated to just grow the equity of the business? Again, and really in all of these 4 examples, KLH is gravitating towards the right-hand side. So what Will and I will do is we'll walk you through really 4 different types of transactions, and the picture prior of Henry Kravis really comes to light here, because private equity is a very flexible investment option. And we'll review, number 1, you'll see in the top left, the outright sale, or the sale of 100% of the assets or stock of a company. Down just further is a majority recap or a majority recapitalization, where the entrepreneur is looking to sell greater than 50% of the business. Next, you'll see a minority recapitalization, where they're looking to sell less than 50% of the business. And then we'll touch a little bit on a debt recapitalization using subordinated debt. And as you'll see, our focus here at KLH is really to, again, partner with management teams who want to stay on board and either are looking for access to growth capital, access to working capital, looking to sell 10, 20, 30, 40% of the business, or 60, 70, 80% of the business. So obviously on the left-hand side, you'll see liquidity. Down below, you'll see control. And clearly, as you move down and to the right, the entrepreneur, by definition, is gaining or earning less liquidity personally, however, is retaining more control. So I will hand it over to Will Dowden, who will walk us through each of these transactions in a bit more detail.
Sure. And I think what we'd like to do is try and elaborate a little bit on the types of transactions that we just discussed. The main theme behind, I think, this presentation is that private equity means, to many people, kind of one thing, which is 100% sale of the company and loss of all operational control. And that's we certainly participate in very few of those type of transactions. And so we'd like to expand everyone's horizon about what's possible with a private equity sponsor. I think kind of the basic type of transaction, which is kind of foremost in everyone's mind whenever they think of private equity, is selling 100% of the company. And these transactions typically are situations where there's a corporate divestiture. Some corporation has a division that maybe they view as non-core to their operations, or that doesn't fit anymore, or maybe it's underperforming, but in any event, they want to divest that division. That typically is 100% sale from the strategic owner, and many times those type of situations can be facilitated by a private equity group bringing the dollars to back the management team that's currently running that division. KLH participated in one such transaction here locally in Tampa. Koala Wash was a corporate divestiture. That was exactly that. The business was being divested, and we backed the management team to buy it. Another situation is sometimes an owner or an entrepreneur maybe hasn't planned as far in advance as far as their succession planning, and now they're at the point where they've reached an age where they need to sell 100%, or they want to sell 100%, and they want to walk away within 6 months. And those are typically challenging transactions for private equity unless they have operational partners on their team. And by operational partners, there's some private equity firms that have GE executives or folks that worked for IBM or something like that are capable of running a business in their mind, and they can drop those people in to run that business on short notice, and can execute those type of transactions. KLH doesn't participate in many of those type of transactions because we do not have operational partners that are part of our firm. We obviously know of key executives that we can put in those situations if they happen to be available, but we don't have a stable of people that are ready to go at all times. But that's obviously a situation where someone may step back 100%. And then the last one is a management buy-in, which may be associated with, one of the other two types here, which is where the management group, currently doesn't have equity and would like to have equity. And so, if there is an owner that's retiring and wants to sell 100%, maybe the management team that's incumbent there, the second level of management, is the right group to be backed by a private equity firm. And that would take the form of a management buy-in, which is a situation where the management team doesn't have equity currently. Typically, when we talk about a management buy-in, and I know I just confused myself there, but management buy-in typically means outside people coming in to own the equity. On the next slide, we'll talk about management buyout, which is kind of inside management taking an ownership position. So on the next slide, this is probably the realm that KLH plays in the most, and that's transactions where we're going to end up with an ownership percentage that is, less than 100%, but more than 50%. In many of our transactions, we own anywhere from, call it 60 to 85% of the business, with a sweet spot being around 70 or 75%. And we get into that position through, a couple different scenarios. The most common is what we simply call a recapitalization transaction, and that's where an entrepreneur or a couple partners have a business that they're running, that they're growing, and they say, hey, we're tired of personally guaranteeing the line of credit and all of the debt that we're using, and we need some fresh capital to continue the growth, and maybe we want to execute an add-on, and before we execute all that, at the same time, we'd like to pay off our mortgages and fund our kids' college funds. So why don't we sell 70% of this business to an outside firm? We'll keep 30% and keep running the business. But it's really a financial transaction to diversify their personal net worth. That's what we call a recapitalization, a majority recapitalization. That is probably 70% of the transactions that we're involved in. A subset of the recapitalization is the family succession. We call it out here as a separate transaction. It frankly is very similar to a recapitalization, but typically, and we just see this a lot, there's generational transitions that have to occur at some point within a business, and that'll be a situation where a son or a daughter is invested in the business and maybe has a minority stake, older generation has a larger stake, and to facilitate the future growth of the business, there needs to be a transaction that takes place to pass ownership to an outside party to allow the older generation to retire. And we just call that out here because we see it quite often. And then the last one there is a management buyout, which is a situation where management that is currently inside the business doesn't have equity, would like to buy out the current shareholders and take ownership in the business. Very similar to a management buy-in where a private equity firm would sponsor a management team to buy into the business. This is where we would sponsor the current management team to buy out the shareholders. Next slide, please. This is just a graphical representation of what I discussed. Recapitalization. You can see here. You have a current management team or owners that own, in this situation, 100% of the business. They want to diversify, in this case, sell 75% of the business. You can kind of see there what that transaction looks like just as a simple ownership pie chart. This is 70% of the transactions that KLH is involved in are some form of this type of transaction. The next slide is similar. It's a graphical representation of a family succession. And as you can see here, this is the type of situation where we're buying out, the older generation or a passive generation. Could even be, two brothers that started a business. One is still active, one is not, wants to go do something different. We may buy out the brother or something like that. And the last one, this is a management buy-in, just so that everyone can kind of see what that looks like. Notice there's a change in the shareholder base. The current shareholders are exiting in this scenario 100%, but the current management team is getting backed by KLH to execute that transaction. What we didn't touch on here that was in the first slide is the debt recap. In those situations, what's simply happening is, a certain amount of debt is being raised in exchange for paying a dividend to shareholders. That can be an interesting type of transaction if someone just wants to take advantage of, capital gains rates to take out, a decent amount of capital and to, basically liquidate some of their shares without giving up significant ownership. It's a decent option, but it's something that we don't do a lot of, but we're happy to provide introductions. If that's a better fit for someone, we're happy to provide introductions to the type of lenders that facilitate those transactions. Inevitably, in any discussion that we have, about mergers and acquisitions, the question always comes up, well, what is the market bearing for businesses that are, in this, lower middle market or this micro market? Our target market is, roughly 8 to 80 million of revenue, and so we overlap, predominantly with the group that Navocate is targeting. And we put up here a little bit of indication about what we think are kind of market multiples, tried and true multiples of free cash flow that people are willing to pay to acquire businesses, and some of the aspects that drive those multiples. And, obviously the business has to be, a business that's going to continue to exist in the future. You don't want to be making, Kodak film in a digital, photography world, that type of a thing. So assuming you pass those type of tests of what does your industry look like, do you have sales momentum, are you going the right way, do you have good management, here's kind of the couple things that are very key to driving value. And a lot of it revolves around kind of the accuracy of the numbers, the amount of confidence people have in what they're hearing and seeing from the financials, and how sustainable those are, and then also the risk diversification among management. And so, as you can see here, if the accounting systems and the financial controls are very strong, we tend to see businesses trade closer to the 5x kind of cash flow multiple. If those are extremely weak and no one can really tell how you're making your money or where your money's come from, that impacts valuation. If the management team is well-rounded and diversified, and if one person gets hit by a bus, the business keeps going, then the business is going to trade at the upper end of this multiple. If it's a one-man show and if that person gets hit by a bus, the business ceases to exist. Obviously, that's a very risky situation. It's going to trade at the lower end. And then, having full-time financial and accounting personnel inside the business that are competent and high level drives value as well. And so there's obviously literally hundreds of aspects that go into valuation, but these are some of the key ones that are pretty easy to point out. Carl, I'm not sure if anyone's asking any questions yet, but feel free to interrupt us at any time. If there's any questions.
We're getting a few, but we'll hold them. You only have several slides, so we'll hold them to the end.
Sure. Okay, so with that, I'll turn it over to Kyle, and Kyle can walk you through a little bit of how we approach our diligence function.
Sure. So to Will's point, basically, how can you guys, as either intermediaries, consultants, or basic M&A professionals, or an entrepreneur, work with a group like KLH? And to Will's point again, what does that look and what does that feel like? Basically, step number one is placing an initial call or an email with basic deal information to a group like KLH. Basic deal information can be, generally what the situation is. What are you as the entrepreneur looking to do? Are you looking to retire? Are you looking to sell 40%, 60%, or do you really not know what you're looking for, but you are outgrowing your business, so to speak, and you need access to additional working capital? So I always like to understand, what's the deal, what's the situation here. Secondly, basic ballpark numbers of revenue, profitability, and the location of the business. Is it in Florida? Is it in New Hampshire? Is it in Oregon? And I think lastly, what's the company do? Do they offer calibration services? Are they a plastic injection molder, et cetera? Secondly, we would then request either a non-disclosure agreement or a confidentiality agreement. After that is signed, I would like to look at a website and do some background research to basically learn anything and everything I can about that specific company. And then I will get back in touch with either the entrepreneur or the professional to basically provide a follow-up call to discuss our level of interest and a few outstanding additional questions. Should both of those things go well, we would like to speak directly with the management team or the entrepreneur if we haven't done so already. And really that call is very, very introductory. Basically look to, proverbially hear from the horse's mouth what they're looking to do, and ask a couple easygoing financial questions to them. After that, we'll always look to shake hands, break bread, schedule a site visit, and actually see the business. After that, step 4. Step 5 would be to issue the letter of intent, which would discuss the terms of the engagement or the transaction that we would like to put forth to the entrepreneur. And lastly, the full diligence process and the closing process begins, and that is not necessarily a painless stage, but not so much a painful stage. Very, very in-depth research and financial diligence occurs at that stage. And lastly, we wanted to discuss, how can we work together? How can you guys as professionals or entrepreneurs work with KLH or a group similar to KLH? And I think first and foremost, just know that primarily groups are very, very open to and happy to work with all types of intermediaries. Whether that be an intermediary on the buy side or the sell side, or a broker or an investment banker or a consultant or an advisor, really anybody who can come to us and present to us a situation where the entrepreneur is in need of capital, and again, for a multitude of different reasons. As Will pointed out, our focus is generally on businesses with 8 or 10 all the way up to about 80, 90, or $100 million of sales or revenue, and EBITDA or pre-tax profit between 2 to 8 million. And if the business is located in the Southeast, I always like to tell folks that we are capable of looking at just slightly smaller businesses. I would say, maybe 1.5 million of pre-tax and up. As some industries that we like to avoid, we don't invest in pure real estate plays. We don't buy pure real estate. We don't invest in restaurants. We don't invest in what we would consider a high-tech or a high-technology-focused business, or any financial services or financial institutions. So that being said, want to leave you with our contact information. If you guys have any questions or situations that either you know of an entrepreneur or you are an entrepreneur who's in need of capital or looking to do something, or you just have a couple questions and you don't really know the answer and you want to shoot them over to us, always feel free.
Okay, terrific. Well, Kyle and Will, thank you very much. This is Carl Buell again. I want to make a couple of announcements here. Let me just go back. I will go back to their contact information. Everyone will receive from us our M&A Capital Growth Guide, which is a guide to how to work with private equity or strategic investors and how to know you're ready. And we'll cover some of the things that both Will and Kyle covered during this presentation. Navocate can help you make that assessment. We'd also like to send you a survey. It's going to come to you by SurveyMonkey. We're very interested in your comments about this presentation. We're always seeking to be better. And then we can also provide you with a PDF of the PowerPoint. So those are things that are coming. Now let me back up and put their contact information up here. One other quick announcement. We did have some people join us midstream. We will be recording this, or we are recording this, and so we can make that and will make that recording available for those of you who are latecomers.